Hi everyone, Edwin here, and today I want to talk to you about auto insurance. I want to talk about what it is, how it works, and what you can do to save when you're shopping around for your auto insurance. Now, what is auto insurance? Let's take it another step back. Insurance in general. The idea of insurance is a part of your financial plan, but it's more of the financial defense in your plan. A lot of people tend to think about the money they've made, the money they're investing, and what they're gonna do with that money specifically. This is more about the defense, the protection of the money that you've made, the assets that you've acquired. And in this case, we're gonna be discussing about it from the perspective of auto, cars, trucks, yada yada. So car insurance focuses on the damages and injuries caused and protecting you from either being sued or being held responsible financially for these items that are damaged in an incident. It's figuring out how to alleviate the financial burden so that yes, it's things that have happened. You have to have things taken care of. You have to go to the doctor. You have to get a vehicle replaced or repaired, but at least the financial burden in that has been alleviated a little bit. The auto insurance is intended to help combat that. So when you first get an auto insurance policy, or even when you get an auto insurance quote, you tend to see a paper, it's got a bunch of terms on it. They don't make all the sense in the world, or they just send it out or you get it online, and there's no real explanation as to what it is exactly. Let me break it down for you. The most common term that you see is the word bodily injury. Bodily injury is coverage not for you, but for the other person. Bodily injury is medical coverage for someone else if you cause an accident and they get injured and you're held responsible for their medical payments. That bodily injury coverage is gonna pay out for their injuries. Then you have what's called property damage coverage. And the idea there is that property damage is if you damage someone else's vehicle, you hit their house, you hit their fence, a pole, whatever you could possibly hit with your car. That's not a living thing or a person mainly. That's considered property damage. And so it's coverage to repair or replace that damaged property so that no one can come after you legally and say you need to pay for this. Your insurance will pay for it. The next item that you'll come across is something called uninsured or underinsured motorists. Certain states have different phrasing, but it's essentially similar. I won't call it the same thing, but it's very similar. And the idea is that if bodily injury was your payment for someone else's damages, uninsured motorist is the payment for yourself in the event that somebody else hurts you and they don't have enough bodily injury coverage to take care of your injury. Most states have a bodily injury limit. I happen to be in the state where that is not the case. But uninsured or underinsured motorists, UM for short, we'll go with UM from here on, but UM coverage helps to make sure that if somebody else has whatever your state minimum limits are, you can get hit by them. It stinks that it happened, but you know that if their policy falls flat or if they don't have insurance, which could be an even bigger problem, at least your policy has something to cover you for that damage, for that injury, so that you can go to the doctor and not have to wait on the other person's auto insurance policy to kick in that case. With uninsured motorists, you will come across two terms. The terms are stacked and non-stacked. Non-stacked is the easy one to understand. It's very straightforward. They give you some numbers. Those numbers will determine what that limit is. End of story. Most common, I'll use some easy numbers here. A popular level of coverage to have would be $50,000 per person, $100,000 per accident. And when you see that level of coverage for non-stacked uninsured motorist coverage, that's just the number. However, if you have stacked uninsured motorist coverage and you see that same 50 and 100, what now happens is that number is multiplied by the number of vehicles that you or anyone else involved in the accident have on the policy at the time of the accident. Now, technically, a lot of insurance companies write it to where it's meant to just be whatever's on your policy. So if you have two vehicles, 50,000 per person, 100,000 per accident suddenly becomes 100,000 per person, 200,000 per accident. That's how the policy is designed. Now, by the time litigation happens, if any attorneys get involved in the claim process, In that case, anywhere else they can pull to say, hey, there's additional coverage that needs to be applied, they'll pull. And a lot of times that can be passengers that are in the vehicle that have their own insurance, how many vehicles the other person on the other policy has, all things that can be used as multipliers in court cases in order to justify increasing those limits. So stacked is a great perk to have, a little pricey, and so not everyone needs it. It's highly recommended from the perspective of just having the additional coverage for additional payout. But if you just want to have uninsured motorist coverage, non-stacked will at least get your foot in the door. Okay, so bodily injury coverage. I'm taking it a step back, so hopefully through editing, we can get it back there. Okay, bodily injury coverage. A lot of times you'll have two versions. You'll have a split version and you'll have a combined single limit version. And the difference is the split version has what's called coverage per person and coverage per accident. So if you injure somebody in an accident, there's an amount of coverage that can be applied to each individual person up to the per accident limit. Whereas the other option, just the big number by itself, the combined single limit, that number is that number. If somebody wants to file a claim on it and get that full amount, they can do it. But if there's anyone else in an accident, there's absolutely nothing paying for it. So the benefit of the split limit is that multiple people can get a payout for it, but they're not going to get the full fit. They're going to get whatever their per person limit is. The benefit on the combined side is that if there's a major accident involving one person, they can get all the care they need taken care of. If there's multiple people in that incident, some people could be left hanging out to dry as a result of one person being able to come after all the coverage. Okay, next up, we have what's called comprehensive and collision coverage. These two are separate items, but they tend to go hand in hand a lot. This is coverage for your vehicle. This is in the event that your vehicle is damaged and you have to be the one responsible for its repair, whether that's because you caused the accident or because the other person who may have caused the accident doesn't have insurance and doesn't have the property damage coverage needed to repair your vehicle. Usually the comp and collision has a deductible tied to it. It could be $100, $250, $500,000. It could be higher. It could be anything between. But the difference, comprehensive coverage covers anything that's not accident related. So think fire, theft, flooding type damage, natural disasters, those type of things where there wasn't an actual accident involved. That's your comprehensive damage. Collision is where you have an actual accident that takes place, and collision coverage can kick in either if you're at fault in an accident and need to pay for your own repairs, or if someone else is involved and they don't have the coverage needed to cover your vehicle. Two optional items that you'll see from time to time, you'll see rental car coverage or some variation of it, and you'll see roadside assistance and some variation of it. And honestly, these are completely optional items. They're just little perks, that way if you're stuck on the side of the road, you have roadside assistance coverage. Or for the rental car coverage, if you are in an accident, your car has to go to the shop, and you need a rental car while your car is being repaired due to that covered claim, that's when the rental car coverage kicks in order for you to be able to rent a vehicle with the insurance company paying out for it. Now, let's dig into how this auto insurance works in detail. There are a lot of factors that play into this. The last number I heard was that there were over 150 factors when it comes to auto insurance and determining what it costs for you to get your car on the road insured. These items include your date of birth, your gender, your address, the vehicle that you're driving, your driving history, whether you've had an accident in the past or not, and this is a weird one, your prior insurance history. Yes, if you have prior insurance with another company, that company who being the prior can impact your rate. So the better your prior company is, the better your rate can be when you shop around. The amount of time that you've been with that previous company can get you a better rate. So the longer you've been with them, the better your rate can look. A lot of people talk about loyalty perks with their auto insurance. That is a thing. It's just not as big as of a thing as people make it out to be these days. But when you are shopping it, the amount of time that you've been with that previous company is considered when you're looking at a new company, looking at that address. So A big part of it is the zip code. The zip code helps the insurance companies determine what traffic looks like where you live. Is there a lot of traffic? Is there no traffic? Do you have a lot of school zones? Are there a lot of claims or accidents that occur in the area in which you live? Those are all kind of factors that are a part of the rate. Another thing involving your address is whether you own or rent. You would think, hey, why does that make a difference? It seems a little personal. You're kind of right, but also it's a factor. Homeowners tend to get better rates than renters. The logic behind this from the insurance company side of things is that you're less likely to have an incident that involves a claim if you're a property owner versus if you're a renter. It's not just about you being a person with a vehicle in that vehicle. The insurance companies also look at who you are as a person, using as many personality traits as they can use on their side to determine what level of a risk you are. The higher risk you are as a person, the more likely you are to either file a claim, have something bad happen to you, or, well, that's pretty much it. The higher of a risk you are, the more likely you are to have something unfortunate happen to you. But also, the higher of a risk you are, the more likely you are to file a claim. Good risk from an insurance company's perspective is someone who won't file a claim when something small happens, because they'll just pay it out of pocket, because they understand that insurance claims count against you. Even though it's coverage and they pay out, they do count against you. So you'll save that claim for when it's actually a major issue. It does look better on paper when the insurance companies look at you as a low risk. So when it comes to the vehicle that you're driving, they're looking at the year, make, model, how the vehicle is used, how many miles a year it's driven, whether or not you're using it for any kind of business use. These are all factors, and also the number of years that you've owned the vehicle is also a factor. The idea behind that is if you've owned the vehicle for a certain amount of time, you know that vehicle better. If you just got the vehicle off the lot, yeah, it's new, or if it's used, you don't know the mechanics of that vehicle as well, and so you're still adjusting to the newness of driving it. So that kind of plays into effect as far as what the rate looks like. Now, there are a few additional items that are taken under consideration depending on the insurance company. Not every company looks at these additional items. Items can include your education background, kind of what I mentioned about the address and the zip code and the claims history. With education, the higher your education, the lower risk you're considered to be. And so they do look at, are you a high school graduate or equivalent? Do you have a college degree? Are you a doctor? Things of that nature. They also look at your occupation, because when you're driving to and from work, your occupational hazard can determine the stress levels that you may be under when you're on the road. Insurance companies will also ask if you're a member of any type of an association sometimes. So they'll ask if you're a member of USAA, they'll ask if you're a member of the AARP, a AAA member, just if they have a discount available tied to those associations or other ones. I know sometimes the Harley Davidson Association can get you some discounts on a motorcycle policy, but anytime there's a discount affiliation there, they like to make that available for you as well. Lastly, this is a very minor detail, but whether or not you've taken any defensive driver courses to help determine what kind of a driver you are and improve your driving skill on the road. Now, as a discount, it is minor. For the most part, what I tend to see is usually maybe a $20 discount per policy term. Take with that what you will. It's not the best, but it's a factor. Okay, now let's look into how you can actually save on your auto insurance. Number one, and this goes without saying, be a safe driver. Don't get hit, don't hit things. That's the best way that you can save, because it prevents your rate from skyrocketing because of accidents, because of tickets, because of claims. Now, sometimes claims like comprehensive claims where you're unfortunately caught in a flood or a fire or a theft, you can't really control as far as your on the road driving skills. But when you are on the road, you can at least practice safe driving habits, be a safe driver, and you won't have to worry about the insurance companies charging you for driving history. Another great way to save, company pending of course, but a lot of companies give you way better rates for paying your premiums in full versus doing a monthly payment plan of any kind. Usually, your least expensive way to get an auto insurance policy is to pay it in full. The next best option is to do a monthly auto withdrawal where it comes off of a bank account or a card of some kind. And then usually the most expensive way is doing a manual payment, whether it's manually paying online or doing a bill by mail. That's usually your most expensive method. Another option that'll save you quite a bit, but it's more of a comfort thing, are the data sharing programs. These programs in the past involved a small chip that you plug in underneath your steering wheel, and the insurance company can monitor your driving habits for a couple of months. Today, and for the past few years now, that's no longer the case. A lot of these companies use apps that you can download to your phone, and using your GPS, the insurance company will use the data picked up from that to determine what kind of driving you're doing, what time of day. Are you speeding? Are you hard braking? Are you in a lot of bumper to bumper? Are you doing a lot of midnight driving? Things of that nature. And the result of those results, look at that, the result of those results, right? The idea there is that you can save money by having good driving habits that the insurance company can verify. They know you're driving pretty safe hours of the day, not a lot of stop and go, mostly a calm driver based on the miles per hour that you're driving, the speed that you're driving. And so sharing that information can be beneficial. You don't have to share it forever. Usually the insurance companies just want you to share it for about 6 months, and those discounts can range between 10% and 30% from what I see. Two more options, and these are pretty minor. You can get higher deductibles on the comp and collision coverage that I mentioned to you. Comprehensive deductibles, you're usually not saving a whole lot when you increase those deductible limits. So I'm not a big fan of those, but it's an option. The collision deductibles, it always varies by vehicle and by case scenario, but you can increase that collision deductible as well and help save on the cost of the policy. And then the last one is the idea of going paperless. A lot of the insurance companies offer the option to go paperless, and a few of them even give you a discount because that's paper that they don't have to print. All right, I'm gonna read this part now. If you found this information useful, please remember that yes, I am a licensed insurance agent, but I'm also a random guy on the internet. So please reach out to your local agent in your area for details about your specific needs. Also, click like, subscribe wherever they show up here on the screen here. And for more, subscribe from that. Click like, subscribe. This is all new. Click like, subscribe, click like wherever it is, click subscribe wherever it is, and enjoy the next video that YouTube decides is good for you to watch, because that would be awesome.